Ever wondered what happens in the stock market after the closing bell rings? The hustle and bustle may seem to die down, but the game is far from over. In the fascinating realm of after-hours trading, stocks continue to make moves, dancing to the rhythm of quarterly earnings reports. As the sun sets, the world of finance gets a second wind, and the market comes alive in a whole new way. These after-hours movements are often driven by earnings reports, those all-important scorecards that let us know how a company has performed over the past quarter. When these reports exceed or fall short of expectations, stocks can experience significant swings, painting a fresh picture of the market landscape for the following day. So, who's up and who's down? Which stocks are making waves as the day ends and the night begins? Let's delve into the stocks that are making the news in the after-hours trading. First up, we have Amazon. The e-commerce giant has given us quite a show this season, surpassing analyst expectations on both top and bottom lines. Amazon's shares are up nearly 2% in after-hours trading, a testament to its impressive performance. The company's strong showing can be largely attributed to its robust advertising sector and its cloud computing platform, Amazon Web Services, both of which continue to drive significant revenue growth. It's also worth noting that Amazon's Prime membership base continues to expand, contributing to a steady increase in the company's overall revenue. Despite market volatility and stiff competition, Amazon's strategic diversification and customer-centric approach have helped it maintain a strong foothold in the online marketplace. So, whether it's retail, cloud computing, or advertising, Amazon continues to dominate the online marketplace, and it's clear that its growth story is far from over. On the flip side, we have Starbucks. The aroma of freshly brewed coffee hasn't been enough to keep the investors hooked this time around. Starbucks, the global coffeehouse titan, has uncharacteristically missed its fiscal second quarter estimates. Despite pouring in a robust revenue stream, the earnings percolated below the market's expectations. This has left a somewhat bitter taste in the mouth of investors. The result? Starbucks shares have taken a hit, slipping down by nearly 10% in the after-hours trading. It's a significant jolt for a company that's been a consistent performer over the years. But as we know, the stock market can be as unpredictable as a double-shot espresso. Whether it's a temporary blip or a sign of a more significant trend, only time will tell. For now, though, it's clear that the market wasn't impressed with Starbucks' latest performance. Investors react to lower than expected earnings, and it seems Starbucks is no exception to this rule. Moving on to the tech sector with advanced micro devices and Pinterest. The world of technology never sleeps, and neither does the stock market. Today, we're focusing on two key players: Advanced Micro Devices, or AMD, and Pinterest. Advanced Micro Devices, a multinational semiconductor company, is a significant player in the tech sector. Their recent earnings report showed a slight surpassing of expectations in total revenue. However, a decline in the revenue from their gaming segment is causing a stir among investors. This decline has led to a more cautious outlook, resulting in a dip in AMD's stock in after-hours trading. It's a bit of a roller coaster ride for AMD, but it's a company that has proven its resilience in the past. On the flip side, we have Pinterest. This social media platform that acts as a virtual pinboard has been making waves in the tech sector. Pinterest's recent earnings report was impressive, beating expectations for both earnings and revenue in the first quarter. This success is largely attributed to accelerated revenue growth, attracting a larger user base and more advertisers. Pinterest's ability to monetize its platform effectively is a testament to its innovative business model. The company has managed to transform a simple idea, a virtual pinboard, into a booming business. This success is reflected in their soaring stock prices in after-hours trading. However, as with all things in the stock market, these trends are subject to change. A company's past performance is not always indicative of its future success, but for now, Pinterest seems to be on the right track, as it continues to attract both users and advertisers alike. So, there you have it. A quick dive into the tech sector with Advanced Micro Devices and Pinterest. Despite the contrasting trajectories, both companies offer fascinating insights into the ever-evolving tech industry. As ever, it'll be interesting to see what the next quarter brings for these tech giants. Now let's talk about Supermicro Computer and Chesapeake Energy. Supermicro Computer, a global leader in high-performance, high-efficiency server technology and innovation, is facing some turbulence after its recent earnings report. Despite beating earnings expectations, the company fell short on revenue estimates for the fiscal third quarter. This weaker-than-expected performance has led to a drop in its share price. It's a reminder that while earnings per share are important, revenue can also significantly impact investor sentiment. On the other hand, we have Chesapeake Energy, a leading natural gas producer. With its earnings report falling short of analyst estimates, Chesapeake Energy's performance has been somewhat disappointing. Despite the underwhelming results, the stock remains relatively unchanged in after-hours trading. This could be attributed to investors factoring in the broader industry trends and the company's potential for future growth. While the energy sector faces its own set of challenges, including volatile commodity prices and environmental concerns, Chesapeake Energy has been making efforts to streamline its operations and improve its financial position. Investors are undoubtedly keeping a close eye on the natural gas producer's next moves. It's important to remember that the stock market is a complex environment where numerous factors can impact a company's share price. Earnings reports are just one piece of the puzzle. Other factors such as industry trends, economic indicators, and investor sentiment also play a critical role. These two cases, Supermicro and Chesapeake Energy, highlight the dynamic and unpredictable nature of the stock market. They serve as a reminder that investing requires careful analysis, patience, and a thorough understanding of the companies and sectors one is investing in. Investors are keeping a close eye on the natural gas producer's next moves. Next, we have Caesars Entertainment and Mondelez International. Caesars Entertainment, a name synonymous with casinos and entertainment, has hit a bit of a rough patch. They reported losses that were wider than anticipated for the first quarter of the year. Revenue too missed the mark, causing a slight dip in the stock and after-hours trading. Even the most robust of companies face challenging quarters, and it seems this is one of those times for Caesars Entertainment. On the other hand, we have Mondelez International. This snack giant, which counts household names like Oreo and Cadbury among its brands, has shown a commendable ability to navigate the stormy seas of the marketplace. Despite facing currency translation challenges, the company posted better than expected results for the first quarter. This comes as a testament to the company's resilience and strategic planning in a market that is often unpredictable and volatile. The contrasting scenarios of Caesars Entertainment and Mondelez International underscore the reality of the stock market. It's not always smooth sailing. Companies, whether they're in the entertainment industry or the snack business, must continually adapt to shifting market dynamics to stay ahead. While Caesars Entertainment grapples with its wider-than-expected losses, it will be interesting to see how they strategize to turn the tide in the coming quarters. Mondelez International, on the other hand, will look to maintain its momentum and continue to deliver strong results, even in the face of challenges. So, there you have it. Two different companies, two different sectors, two different earnings reports, and two different market reactions. It's a fascinating dance, this world of after-hours trading, and it all goes to show how diverse and dynamic the stock market can be. The snack company is demonstrating resilience in a volatile market. Lastly, we have Diamondback Energy and Clorox. Diamondback Energy, a key player in the oil and gas industry, has caught the market's attention with its earnings report. The company managed to surpass analyst estimates for the first quarter, a feat that deserves applause. Despite a marginal drop in share price, the solid performance from Diamondback Energy has earned it a nod of approval from investors. On the other end of the spectrum, we have Clorox. The well-known consumer goods company has faced a decline in after-hours trading. The reason? Its revenue fell short of expectations in the fiscal third quarter. Investors are now carefully chewing over these results, trying to predict where Clorox might be headed next. The company's future trajectory seems shrouded in mist, as speculations and predictions fill the air. Uncertainty looms over the consumer goods company's future trajectory. And there you have it, folks. We've embarked on an enlightening expedition of the after-hours trading atmosphere today, from Amazon's remarkable earnings triumph to StarBucks' falter on the fiscal second quarter estimates. We've taken a deep dive into the tech sector, where advanced micro devices and Pinterest have illustrated the peaks and valleys of the market. Supermicro and Chesapeake Energy served as reminders that even when earnings exceed expectations, revenue can disappointingly lag. Caesars Entertainment and Mondelez International highlighted the effects of unexpected losses and obstacles in currency translation. And finally, Diamondback Energy and Clorox provided a sneak peek into the unstable territories of oil and gas and consumer goods corporations. As always, the market is a multifaceted and ever-evolving beast, brimming with shocks and chances. Thus, keep your gaze on the ticker, your thought process receptive to potentialities, and your finger on the market's pulse. Stick around for more updates and dissection of the freshest stock market developments. And before we wrap up, we encourage you to hit the like button if this video helped you navigate the highs and lows of today's trading landscape. Don't forget to subscribe to the 10 Billion Club channel for more insights into the world of trading. Tower above the rest with the 10 Billion Club.